Hey everybody, Dean here from the Feely Real Estate Group, and today we are doing our October monthly market update. So we got tons of changes from what happened in September, tons of home sales that have changed, a lot of stats that I'm going to go through. So let's take a deep dive into today and see what's happening in the Ottawa real estate market. So first thing that we'll do is we will go through let's take a look at the new listings actually. So new listings per week. So we are, as of, what was this, last 4 weeks, 1, 2, 3, 4. So we had a huge spike in September where the listings went up. Obviously, a lot of people were holding out from the summer. As you can see, that's been kind of typical behavior for the last 5 years. It's, July and August are typically slower months where people are not in town, they're on cottages, vacations, whatever, right? And then everybody that's planning to make the last push to move before the winter, they're listing in September. So we see a huge spike here. This is that long weekend in September. So looking at that, you had just 800 up to like an 850-ish range hit the market over those next 2 weeks. We dropped off a little bit over the last few weeks, but still going pretty strong above the last few years. The only time we were kind of higher than the last few years is in 2020 when the state of emergency happened in March and they had to delay everything to the end of the year. So, I mean, we're obviously way below that comparatively, but we're much higher compared to 2023. We're much higher compared to 2022 and 21, and then 2019, where we would have been kind of similar throughout the year. Or sorry, 2023 would have been similar. But yeah, looks like listings are hitting the market, but we'll see where the activity is, right? So let's take a look at the solds. So in terms of solds, we had also a big spike, right? We had some big spikes here. A lot of inventory that was sitting over the last few months started selling. So we saw a spike, 400, then we dropped down a little bit, but then we came up again over 400. We're dropping down this week, but I'm seeing some big sales happen this week as well, and it's quite busy. So compared to 22 and 23, this is great news if you're a seller. If you're looking to sell your home, this is if you're listed right now, this is going to be the peak before we hit December. We're seeing actually a lot of 30-day closings, which is very interesting to see. A lot of 30 to 45 days. Typically in this area, you're seeing like 60, 90 days. That's kind of been the average. But right now, we're seeing a lot of quick closings because everybody wants to be settled in before the Christmas holidays, before the winter starts really. Nobody really wants to be moved. I hate moving, but moving in the middle of December, that sounds awful. So I can see why people are going with that reasoning. And yeah, they're, we're another month and a half away from some snow most likely. So yeah, let's go to the average price point. So yeah, look at that. So the last 3 weeks have been really steady. We've been just shy of the $700,000 mark. That's residential only. So let's take a look. So yeah, residential only, you're looking around $690 price point. We're gonna go a little bit more in depth once we go to the info sparks. But yeah, this is just like an overall look for residential. You had a bit of a spike here the last couple of weeks. And I think it's going to hold steady over the next few weeks. But yeah, much better if you're selling in this part of the year compared to the last few years. You're doing much better, probably getting a lot more action than we did the last few times. Average sale price for condos and residential. So this is pretty much every sort of property available. The average is, we're at 664, I believe, right now. So you saw a pretty big uptick right here, right? So we did hit some lows throughout the year. Like we spiked up here March, went down a little bit in April, and then it kind of held steady, and then we dropped down a little bit in July and August, and now we're on an uptick, right? So pretty interesting to see because typically you're seeing this kind of go down over the next few weeks. So that's something very interesting that we're seeing right now. But is it going to continue into November, December? We will see. That is a huge question mark. I know a lot of people are talking about the interest rates, how things are going down, and to be honest, it's a very different market than we've seen the last few Septembers. The last few Septembers and Octobers, we've seen rate hikes. Right, this is the first time in 2 years that rates are. Last year, if you were buying a home, you were probably between 5.8 to about 6.3% interest rate. Right now, you're probably averaging about 4.5% on your interest rate on a 5-year term. So very different stuff, right? That's going to include that's going to change a few things, right? Your monthly payment for one is going to be much lower for the exact same property, but that's also the difference between, buying a property at 6%, 6.3, 5.7, whatever. Buying a property with that rate, you're qualifying for much less than when you're buying something for 4.5. So somebody that's buying a home in the 600s right now is competing with the most pressure in the market. 600,000 is roughly your standard kind of townhome, first time home buyer, things like that. First time home buyer, young families. That is where you're seeing the most pressure on the market. So that could be the difference of you buying something last year and competing with, tons of buyers where they want to get that price point, compared to right now. Maybe you're getting something for, it's listed at 665, but maybe you're getting it for 650 or 640 because you're above that kind of bracket of 650, and you can actually get a good deal on it and you're not competing with anybody. So there's very, very, very big differences between this market of qualifying for that rate and comparing what you're buying this year with it, right? So very, very big differences between last year and this year, same time. So yeah, let's get into the InfoSpark stuff. So this stuff is very, very interesting. So we actually saw, so let's take a look here. Median sale price. Let's take a look at the averages. So yeah, so April we hit 704 this year, right? Then we dropped down to 695 in May, 689 in June, July 681, August dropped down to 666. Now we go up to September 690. Okay, so that's a huge increase, right? Now that's for the last 3 years. So even if we go back to September, August 21, that's 628, September 664, 2021. And now we're at 690. So yeah, very, very different. Very, very big difference. But you can see the trend is every September there's a little bit of an uptick. I mean, here is very little, but yeah, I mean, so the year of 2022, that's when we had that huge peak, had a massive drop, but we still saw an uptick in September, right? So September is really that last push. That's kind of what I've been harping on is you're not going to see much movement in July and August, honestly. Like it really, really just grinds down to a halt. And I know some sellers are worried, how come I'm not getting action? It's sunny out. What are people doing? Well, they're not looking at houses. Right? Like everybody that wanted to move in to their house in the summer, they already did that in June, right? So anybody that's buying a house in these points where the peaks are, that's because they want to be in their house by June at the latest, right? They want to be in a new place, new neighborhood, get their kids set up for school. So like if somebody's moving into a house in August, their kid is probably not spending that next semester at their old school. They're not taking, like, unless you're really quick with it. I mean, it's hard. Like again, you're just seeing a lot of that, a lot of these trends come over and over again. And then again, September uptick, and then it drops down. So I think this is going to be our uptick this year. Like this last year, it was we went from 661 to 680. So very similar to this year, 666 to 690. So we went even a little bit higher this year. But yeah, same thing. Drop off in July. I mean, last year's a little bit tricky, but yeah, it was a little bit delayed, but you did have a huge drop in August. And then yeah, so very, very interesting stuff. Now, I think this year's price point, this has a lot to do with what properties we're selling, because we saw a lot of heavy inventory sell. Heavy, I mean by high price points. So if we look at, what do we got here? So high price point. So this is 759 or more. This actually went down. Total sold. So yeah. So anything 759 or more, there was more sales in September. This is 580 to 758, 347. So that was an uptick. And then yeah, this is exactly what I'm talking about. So we had less and less sales of the 420 to 579, and that is your first time home buyer bracket. That's the huge point right there, right? 419 or less, same thing, huge drop offs. So we saw these two brackets of where there's the most pressure. We saw that sell a lot less than the last couple of months, and then we saw the big price points start moving. So that's where you're getting that increase of all your price ranges sale price, if we go to, that's where you're getting the big increase, right? Doesn't mean that the it's really like you're getting the townhomes aren't changing much in price. They're not going, like if you were buying a house for 610, that's a townhome, they're not now all of a sudden selling for 650. That's not the case. It's more so that we saw a lot of the big inventory start to come off the market, and that's what happened, right? But a huge thing too is new listings. Back to that, so it went from 1936 in August to 2394. So that's the highest we've seen since June. July, right? July 2283, still higher here, so 2400 homes for sale. So we had 3,500 homes for sale in August, which was down from July, and then we went up to 3,748. So we're matching what was happening in July. Total sold. So this actually went down. So total sold in August was 1097, and then we went to 1066 in September. Days on market, as you'd expect, so it came down, right? So we went from, median was average, so let's go average. So 37 down to 35. If we look at just the medians, went from 24 to 21. So some changes there. Things are active, things are moving, buyers are jumping on the homes. Like I said, a lot of it is with the timing in the market. Cumulative days on market, so total days on market is also down. And month supply, where are we at here? So yeah, we actually, it's not by much. This one is it's a weird one, right? Like we did get more inventory on the market in September, but a lot of it did sell. So it's I mean, technically it's up, but I think it's a lot more of new inventory than it is stale inventory. So this one here I like a lot because our percentage of list price didn't change much. It was by 0.2%. And I'm going to go actually into the matrix. I'm going to show you some of the most recent sales. You're seeing like just because the market is picking up doesn't mean you're getting a lot more. There has been some properties that are holding offers and are getting some multiple offers, but it doesn't mean that they're overpriced, and it doesn't mean they're going hundreds of thousands over asking. They might be going over asking by a little bit, or just slightly under, depending on the offer, right? I always talk about, when you're a buyer offering on a property and a seller's looking at multiple offers, what's important to the seller? The seller is looking for the highest price with the best conditions, right? So you having no conditions is a big part, right? When you offer conditions, that's still you're maybe buying the home, right? You have a walkaway clause altogether. So if there's 4 or 5 offers and they're all within striking distance, I've seen sellers reject higher offers of 15 to 30,000 just because a deal was firm. So sometimes you might see those sales where somebody doesn't want a home inspection and they're good on their finances, but they're going to come in firm with, a 30K price difference because first of all, if they're experienced, maybe they know the house well and they say, okay, I'm going to need some money for this, and this. So I'm willing to offer this. I'm firm. I'm ready to close anytime, but hey, I'm not giving you your price point, right? So an experienced buyer might be able to do that. But again, if you want to be fully protected, that's not something I recommend. I always do recommend protect yourself with a finance clause and always protect yourself with a home inspection to know exactly what's going on. Just be cognizant of those two things. Percentage of list price, we talked that, dollar volume, shows to sold. So shows to sold average. So this is good. If you're a seller, if you're looking at, how many showings is it taking for your home to sell? Typically in August, it was taking 11.1. So that's, every 11 showings, you'd get an offer. I typically like to say that every 10 showings, you should be getting an offer. If you're not getting a showing on if you're not getting an offer on the 10th showing, that means you're overpriced, right? So now we're coming back down to that point. So this shows, again, homes are selling much faster. Showings per listing. So the average listing is getting 4.2 showings. Not much difference from, like, a little bit of an increase from August. So that's the thing, right? So what do you need to do to get your showings to 10 if you're selling? So yeah, those are the InfoSpark stuff. I love looking at this stuff just because it gives me a good idea of what's happening in the market. Let's even go back to 5 years. Homes for sales. So I was actually looking at this the other day. So homes for sale. So look where we're going, guys. So this is very interesting. So this is going back to 2014. So 2014, we were averaging $6,600 homes for sale in the market. So a buyer could do whatever the heck they wanted in this point. They could, you could offer less. The seller really had to do everything in their power to sell their home. Even here, May 2015, 7,100 homes for sale in the Ottawa area. That's huge. If we look at the peak of all time, we were down to 1,500 homes a month. Some months, 700 homes a month. That is nothing. Thousands of homes less for sale than we were 5 years before that. Even now we're climbing to 2668 in July of 22. October of 23, 3239. June this year, 3838. We're half of where we were 10 years ago. So there's a good amount of inventory there, but it's not enough for where the prices are going to tank. It looks like we're climbing. We'll see where all this goes. I think we're going to probably stick around this point for the next little bit, because even here, like if we look at 2017, 2018, you're looking at 5,000 homes, which is a drastic drop. Like we went from 6892. Like imagine you bought a home in this market and then you're selling your home in this market. You're probably making a ton of money, right? Like if you look at the sale prices, yeah, 3777, 423. So 50 grand difference in price points between those like in a year, basically. And that's the thing too, right? Like if we go back max, like these are all buyers markets. You weren't making any money here, right? Like even like looking back at this, I mean, it's a little bit nostalgic, whatever, right? But like let's say you bought a home April 2008 and you're selling it. So what was that? April was 2008, April. So you bought for 308, call it that, right? 2 years later, 336. So what? You maybe made 15 grand. You had enough to pay the commissions to sell your home, plus your fees and stuff like that. So you weren't really in any sort of equity. And now here, there's a little bit more drastic jumps like this. Let's ignore this stuff. But even here, like let's say you bought in November of 23, when I was saying it was a very, very good market. Obviously rates are one thing. You can't control rates, but at a price point, if you're looking for the best price point, 638, and you were just going to finance it for a year or two, maybe looking at that, look at the huge jump there. So yeah, lots and lots of changes there. But let's take a look at the recent sales here. So sold. So yeah, just that too. So sold 427. That's in the last 7 days. New listings 888. So these are all went from conditional to sale. So you had 1, 2, 3, 4 firm sales in the last couple of days. So let's take a look at this. So it's listed for $799, 104 days total on market, 720. That's in Kemptville. Okay. Stormont, listed originally at $839.5, dropped down to $799.9, sold for $799.9. So yeah, okay, they stuck to their price, but original drop of $40,000, right? Kilspindie Ridge, listed at $714.9, sold for $692. That's 204 days on market, 79 at that current price. Huge differences, right? Clarence Rockland, 642. This is a detached bungalow, sold for $635. You can't get a bungalow anywhere in the Ottawa area for under $600. So yeah, what does that look like? Pretty nice little place, actually. Oh, that's a cute in-ground pool. Or is that above ground? It looks like an above ground pool with an in-ground setup. Interesting. I haven't seen that, but yeah, pretty cute little place. $635 for that. Then Midland, Arlington Woods, $475 list price, 34 days on market, $464. Right, still took a month and a bit to sell. Embrun, $578.9, 194 days on market, $555 sold price. Fielding, This is kind of in the neck of the woods I grew up in. So 750 list price, sold in 13 days for 745. So yeah, I mean, this is a pretty hot area. Riverside Park South, right? So you're in a pretty exclusive area. It is a home that needs work, and yeah, like it needs work, but for 750, you're not buying much in that area, and it's a beautiful backyard, beautiful lot. It's a 54 by 133-foot lot, so it's a massive lot, detached, 4 bedroom, three bath home, fully finished basement. It's gonna be a good layout. It's gonna I bet you somebody's gonna do a bunch of rentals in there and get this up to probably a $900,000 value easily. Rawson, so Barhaven East, 799 list price, on the market for 162 days total, 770 sold. Let's take a look at the history. History on it, 849 sold for 770. So yeah, huge differences, right? These guys listed in, what is this, April 30th? Price decrease from 849 to 799 back in July 12th. Canceled it. And then they went up to a new listing 19th of so just cancel relist, conditionally sold. What is this, 10th? Yeah, so conditionally sold on the 6th of October and firmed up on the 10th, and yeah, 770. Nice little deal there. Detached home in Barhaven East, pretty nice place. I believe this is off of a kind of a main road, but yeah, nice place. Beatrice Drive. I think this was one of our listings. It might have been. No, it wasn't ours. 744.9 sold for 725. 44 days on market. Yeah. Again, single detached home, 3 bedroom, 3 bath, 1 car garage. Kingston. Let's go through some of these more. In Ottawa, Prescott, Pembroke, Almont. What's in Almont? What is this? This is a condo, 298. Sold for 284. So still 21 days on market. There's a deal there, right? All of these, again, it's not like it's a fire sale, and I don't want people to think that you can go with we've had some clients say, oh, I want to offer 100K under asking. Like, sure, but you always got to remember is, why would they accept your 100K offer below asking when they can just drop the price by 25 grand and see who comes, right? Like, as a buyer, you got to kind of look at it from the seller's perspective. Obviously, we're in your corner as a buyer, but it's just we have to have realistic expectations when we're, an agent is like, if you're my seller, I would 100% tell you, do not accept a 100K low ball. Go ahead and drop it down by 25 grand and see what happens over the next week, or drop it by 50 grand. What's the, what are you going to lose by dropping it 50K in price? Maybe you get multiple offers and get it back up another 10 or 15 grand higher, right? There's tons of possibilities. Like, right now is the time to be doing those things and not accepting low ball offers. So there is some wheeling and dealing that's happening for sure, which is great. But again, everything that we've looked at is how many days on market is it? It's been more than 30 days. Like, even the ones that sold quickly were maybe a couple grand below asking. So it's good. But yeah, like, just so you can see, like this one here in Embrun, 949. What is this? A 3-car garage, 5 bedroom, 4 bath, sold for 949. Sold for asking, out of board member. So that's a weird one. So it could be somebody from Toronto that's willing to pay that high of a price. 47 days on market. Albion sold for 800, was originally listed at 1.1. Yeah, so tells you everything you need to know. 1.1 was way too high for that. 800 probably makes a lot more sense for that. What does it look like? Yeah, it needs a full gut. Like, it's an original kitchen, original everything. So 1960s, yeah. That makes a ton more sense than 1.1. Nothing, that's not worth 1.1. So yeah, I'll stop boring everybody with that. But yeah, just to kind of give you an idea of what's happening. In terms of government bond rates, so this is going through the where the fixed rates are. So this has changed a little bit. So let's go to the 1-year route. Yeah, so we're back up to the 3% mark compared to last year, same time we were at 4.24. So 2% is what your fixed rate would be above this, 1.5 to 2%, depending on if it's an insured or uninsured deal. So yeah, you're looking at what, 5-ish, somewhere around the 4.5. I think right now you can get probably, I've seen some clients get 4.3, 4.19, depending on what you qualify for, depends on everything. I don't know anything about you, but whatever your qualifications are, you'll get that rate. But typically you're seeing about 4.19 sounds like the best I've heard so far, up to about 4.7, 4.8 is somewhere in there is the average. But if you compare to a year from now, or sorry, a year ago, you were at 5.7 to 6. So it's a huge difference, huge change. Another thing that I wanted to talk to everybody about was, Department of Finance. So new releases. So increasing the 1 million price cap for insured mortgages for 1.5 million, effective December 15th, 2024, to reflect current housing market realities and help more Canadians qualify for a mortgage with a down payment below 20% increasing the insured mortgage cap, which has not been adjusted since 2012, to 1.5 million. It will help more Canadians buying a home. So what will this do? I think this will have a big effect on people looking for multi-unit properties and stuff like that. So investments that people are, if you're a millennial or Gen Z, and you don't mind um, getting into the market, but let's say you want to be something like, you don't mind having some neighbors. So let's say you want to buy a multi-unit where you have, you're renting the top floor, or sorry, you buy the top floor. It's a detached building. You're in the top floor. You got somebody underneath you and somebody in the basement, like a triplex, something like that. I think that where that 1.5 million might make a lot of sense. That would actually be a really great opportunity, because you don't have to put the 20% down, and you can go in with as little as 5%, and you can go with a lender that'll qualify you with the rental income included. I know we talked about most banks will only use 50% of the rental income. There are lenders out there that will use 100% of the rental income. Attach that with your 5%, and you could be the owner of a fourplex, triplex, duplex, whatever, right? And still qualify for something like that, like a property like that. Also, I mean, if you're a young family too, and you guys want to go with as little as 5% down, let's say you don't have the cash, but you do want something that you're going to spend your next 10 to 15 years in. So something like a 1.2 $1.1 million home in Ottawa, that would be a nice big home. And let's say you have a big family, you don't have to go with the 5, you don't have to go with the 20% down, but you have the monthly income that you can support the monthly payment. Then might make sense for you, right? Because what's 20% of 1.5 million? That's 300,000. So 1.5 times 0.05, 75,000. So a $300,000 down payment is 20%. 5% is 75,000 on 1.5 million. So again, doesn't mean you have to spend the 1.5 million, but it just means that you qualify for something like that. Expanding the eligibility for a 30-year mortgage amortization to all first-time home buyers and to all buyers of new builds. So this is where you have to be careful. Is the monthly payment going to make sense on 30 years amortization, or are you worried about paying it off faster, because you are incurring 5 more years of interest, which could be 100, 200, 300,000 more in interest that you're paying over that next 30 years. So really look at it that way too. The other thing too is, if you want to do the 30-year amortization, keep in mind that you can actually, let's say if you're buying a new place, you want to do 30-year amortization to help you with the monthly payments right now, you can. And then on your renewal or your refinance, you can actually bring it down to 25-year amortization, maybe put some more cash into it, and then that way you're shortening your term as well. So again, I think these are some positive signs. Are they going to help everybody tremendously, and is it free money? No, but I think it's a good sign for depending on what you're looking for. So it really depends on the client's needs. What else? Are we missing anything here? No. So I think that's pretty much it, guys. I think I've covered a lot of information today, but if you guys have any questions, or you're looking at different properties, or you want to know what's happening in a specific market area. So let's just go back on, like let's say we look at the map. So if you have a property that, you're looking to buy or sell in Barrhaven, and you want to know what homes are worth in Barrhaven, give me a shout. I love looking through these. Canada. I specialize in all the suburbs. I'm very, very well versed in Centertown as well, and all these areas. We have listings all over coming soon, and all that stuff. And if you're looking for some investments, we do have a bunch of new opportunities coming up. So if you have any questions, guys, feel free to reach out. The number is 613-863-0873, or you can send me an email at dean@feelyrealestate.com or reply to this email when it comes out. So thank you so much, and we'll talk to you soon. Have a good day.